Hey everybody, it's Mike from Orderflows, and in today's video I'm going to talk about imbalances in the order flow. Okay, so imbalances occur when you have more aggressive either buying, that would be a buying imbalance, or more aggressive selling, that would be a selling imbalance. Now, how do you measure it? Well, you measure it based on the volume that's trading in the two-way auction, right? We know we have a bid at one price and an offer at the next higher price. So say the market is 5 bid at 6, 20 lots trade on the bid, 150 trade on the offer. You would call that a buying imbalance because only 20 versus 150. Now, people generally use a ratio of about 4 to 1. Some people use 3 to 1. Some people use 5 to 1. Some people use 6 to 1. It really depends on what you want to consider an imbalance in the marketplace, but sort of the industry standard, if there is one, is about 4 to 1. And when you start seeing more than one imbalance in a bar, that's time to pay attention. Now, a stacked imbalance is when you have, 3 or more imbalances stacked neatly on top of each other. So, a buying imbalance at 5, buying imbalance at 6, a buying imbalance at 7, then you'd consider that a stacked imbalance. And it's important to make note of where these occur because, markets have memory, right? Liquidity has memory. So when a market comes back to those levels, it can give you a good opportunity to either get long or get short. And if you're looking at a normal bar chart, right, all you see is just the open, the high, the low, the close of the bar. And when you're looking at a candlestick chart, it'll either print it red or green, green for a bar that closed up, from where it opened, or red if it closed lower than where it opened. Normal bar charts, open, high, low, close charts, just, you're just looking at the bar. There's no colors. But sometimes people say, well, there's so much price action you can see on a candlestick chart. Not really. You're just looking at the relation of the open to the close, and you're seeing where the high and the low is made. But if you're just looking at a normal candlestick chart like this, you don't understand why a market pulls back to a level. Why does the market at 905 pull back to 39.75? Right? Well, because it references this level from earlier when the number came out. Okay. Or why does the market pull back to 91 here and then sell off? Well, it's because it's referencing something that happened earlier. And usually there's something in the order flow, right? Something interesting happened, right? So if you remember, Friday the 2nd was the non-farm payrolls, right? Big bar up, right? And you had this nice stacked imbalance appearing right in that middle of the bar, right around the 39.73 to 74 area, right? Boom, boom, boom. Number came out. A lot of aggressive buying. Don't see a lot of liquidity there. Market just shot straight up. Okay, but you're left with this stacked buying imbalance here. As you can see, this big green line coming through the chart. And what happens later? Market goes up, comes off, comes right back down to 39.74. Imagine if you knew of that level as being a piece of market generated information, you can trade around it, right? All you got to do is you just throw in a bid here right around the 74, a stop at 73, and look what happens. It's holding 1 bar, 2 bars, 3 bars, 4 bars. Then it rallies from 74 all the way up to 94 in about 10-15 minutes. Okay, simple, right? Just like look at this little stacked imbalance here. It only lasted for 1, 2, 3 bars right up in here. But it's holding. Imagine you could buy it here at 86, right? It rallies up into the 90s, right? Again, a quick 5 points. Here's a stack selling a balance. This one failed. It just kept going up. It took it out and kept going higher. Okay. I mean, not all trades work out. I wish I could say that this is one of those trades you could go mortgage your house for and trade them every single time. I mean, sometimes, markets conditions change, and the market, these aggressive sellers that were here earlier, they're no longer here. They're not interested in selling anymore. Right, here's one, right? Market sold off, came off. It's kind of holding this level around 81. It held, got a little bit through it before rallying back up. If you look at, this was a level from the day before. But if you're looking at, this level, we hit our high up here after the number came out. And, around this, 96, 97 area, you got a stack selling imbalance came in. Market sold off, rallied right back up to where? 96, 97. And then just went sideways on you. but again, it's going to give you a nice opportunity for a scalp. Honestly, to see trades like this work out where it came right down to 74, held it perfectly, then rallied 20 points is not normal. I don't want you guys thinking that all I gotta do is buy and sell stack imbalances. You guys still gotta take market context into it and use risk management, but it gives you something that you can build a trading strategy around. Okay, so again, I don't want you to think, oh, Mike's just showing me the perfect example. I mean, let's take the previous day. And I prefer to look at the stacked imbalances during the U.S. Sessions as opposed to the overnight sessions where there's less volume. Here's a couple. There's two in this bar: buying imbalance, buying imbalance, stack buying imbalance, stack buying imbalance. The first one sort of went sideways on you. The second one came right back into it, overshot the imbalance by just one tick before again shooting up almost over 20 points from the the 22, 23 up to 43. Right, just pretty much nice methodical move straight up. Here's a stack selling imbalance, just went sideways on you. If it didn't stop you out up here, just went sideways on you. As a trader, you got to decide, is this market paying me or is it just going sideways on me? Here it is, just going sideways on you. So you're going to see these in pretty much all markets. Right, here's a nice stack selling imbalance, came right back up to the level again, got past it by just one tick before it sold off. Right, people always look at order flow as a tool to help you find levels, and these are generated by what's actually trading in the market. Right, it's not based off of some mathematical calculation other than do you have more aggressive buying than aggressive selling? And here I have more aggressive selling than aggressive buying. Well, okay, it's coming in at what level? 39.22, 39.21. Okay, if the market comes back up there and it's going to not penetrate it too much, and if there's going to be some aggressive selling still coming in after we get up to that level, I probably want to be short, right? And you can see stack, here's a selling imbalance, here's a selling imbalance, selling imbalance, selling imbalance. Okay, yeah, it's probably a good opportunity to get short there. So again, stack buying imbalances, stack selling imbalances, are great levels to key around, right? Here's a stack buying imbalance. The market just sort of went sideways, tried to put a half-hearted rally in, but just going sideways. Okay. Now, as a trader, probably in the next video, I'm going to talk about signs of realizing a trade is not working out, that a trade is going sideways, that maybe you should realize that, hey, you know what, I got to get out of this trade and wait for something, more important to come in to give the market a push. So, again, just look for stack buying imbalances, stack selling imbalances. Right? It's not brain surgery. Everyone wants to try to make the market something bigger than it is. Come up with all these algos, all that stuff. When you just trade what's right in front of you, right? Here's a stack buying imbalance. Okay, doesn't work out. Fine. You just wait for the next trade. Right now, this is E-minis. Let's take a look at another market. I don't know. Let's go to crude oil. Okay. Just give me a second here for the chart to pop up. Okay, so here's the crude chart. Just make this a little bit easier to read, scrunch it down a bit, scroll this in here, and just really quick, sort of go back. Crude has been, crude's volatility in crude's picked up, obviously this year with everything going on in the world. But look at this beautiful level right here. This came out again right around that number time, right? Non-farm payrolls just after 7:30. You can see it came right down to the level right here, 88.20 to 25, and a nice move up. Okay, so again, it doesn't matter what market you're looking at. You just want to be looking for stacked imbalances, either stack buying imbalances, stack selling imbalances. And again, if you're looking at normal bar charts, you're not going to see where imbalances are coming in on the market, right? It's only on these footprint charts that you can see these areas where you have stack buying imbalance from earlier or stack selling imbalance from earlier. So, I'll end it there for today. I hope you found this video useful. Again, if you like these videos and you want to see more, be sure to, subscribe to the channel, hit the button below, and obviously like the video. It keeps, vanity. It makes me feel good that people are liking my video. And, again, just read what the market is telling you, look at what the market is telling you, and trade it, right? Again, people like to overcomplicate things. You don't need to, right? Just trade what is right in front of you based off of what's trading right now, right? That's the whole beauty of order flow. Order flow is best used as soon as it becomes available. As soon as this information becomes available, right? When that number came out, you're like, okay, I got a level here, okay? And it's whole, it's next thing you know, it's coming out at 7:30. It's 8 o'clock. It's 9 o'clock. 8:30, 8:45, and this level from earlier. It's being drawn on your chart. Okay, let's see what happens if it comes down into it. Oh, it's holding. Okay, chances are, if it's holding, chances are it's going to rally. So, anyway, guys, I could go on for hours about order flow. It's just so fascinating. So, thanks for watching this video, and be sure to check out the next ones. Bye-bye.